Welcome to this video on Forex trading for beginners, and this is Barry Burns with Top Dog Trading. Today we're going to tackle a topic that is one of the first things I ever learned when I took a formal class in technical analysis, but I rely on it heavily to this day, 49 years later. Well, actually, my dad started teaching me when I was 8 years old, so I think I took that class like 20 years later, but still, long time ago, long time ago. And this is very basic stuff, but as is true with many things, whether it's sports or academics or just life in general, the basic things are often the best. And so this is good whether you're a beginner, intermediate, or advanced. And basically what we're talking about is looking for support and resistance at major highs and lows in the market that just stand out to the naked eye. And the market logic, what I call market logic of that is, meaning why would this actually work? What's the reasoning behind why this works? In other words, it's not just theory, but there's a practical reason why it would work. Is very simple, that the markets are essentially a big, huge international auction place. And the more people that see a support or resistance level, the more participants are likely to respond to that support resistance level, to buy off of it, to sell off of it, take profits into it, etc. And so it has a self-fulfilling prophecy. It's kind of funny. Some people say, well, that's just a self-fulfilling prophecy. And my point is, well, but that's exactly why it works. So why would you diminish that? It's just a self-fulfilling prophecy. In the markets, in an auction place, yeah, people get excited about something or they're not interested, and that affects the price, whether it's driven up or whether it becomes stagnant and has to lower. That's exactly how markets work. So a couple points here. Now, I have a mathematical formula that I use for drawing these. I have these automatically drawn on. But the basic concept, again, is what will most people see? What will the vast majority of the people see? What just stands out on a chart that everyone's going to see that as a major high? And we see this whole level in here as a high that really stands out in the market. Now, this is the top dog trading principle of three, the principle of three. And again, it has a market logic to it. So we've got a high here. Market comes down, retest that once, comes back, retest twice, comes back, retest the third time. If the market does not go above that level after 3 retests, it's likely not going to go. And again, it's just the psychology, the math psychology, I should say, of the markets where people are saying, you know, the market has retested this price level now 3 times and it hasn't broken above it. It's probably not going to. Why? Because people aren't willing to pay more than that. They don't see more value than that price level for, in this case, the dollar yen. And so we've tried it 3 times, or we've retried it 3 times, not going, so probably not going to go, and so it goes down. Now, where does it go? It goes to the very next support level, as defined by what? A major low. So let's go back here and see where that came from. Okay, it came from there, but it actually goes back before that. It actually goes all the way back to here and to here. So again, you see 1, 2. You can see these levels. The market came back to it again. 3, 4 comes off of it. Now, this is what will often happen. So the market, now the other point of the top principle of 3 is that it works best when they are close together. Why? Because that stays in the memory of traders. So that's pretty much the point. People are looking at it and saying within a short period of time, relatively short period of time, where you can see it on the chart. It's all right there in the chart, and you see it. You don't have to scroll back and look back a year or two. Then it's right in people's awareness, and that's why it works. The principle of 3 does not work as well if it's over a long period of time like this. This is 2016, and we have to go all the way back here to, going back over a year. So we're going back about a year. So therefore, it's not as readily available. Now, will some people see it? Absolutely, they will. And for that reason, people did respond to it. So the market came down. 1, 2, 3. Tried it 3 times. And then made a big move up because people gave up on shorting the market here. They thought, okay, well, the market thinks it's worth more than that market, meaning the market participants globally. And so, yeah, it went up quite a bit, but then, boom, and this time it just slid right through. Now, there's one little bar there that shows that the market did acknowledge that support level, and that is this one right here. It's a very neutral bar. I just call that a bar of hesitation. So it didn't bounce up off of the level. It's not a bullish bar. It's not a bearish bar. It's just that the market participants are like, uh-oh, we know we're into this well-known support level. And so for one day, the market hesitates. Now remember, support resistance levels are broken all the time. They don't hold every single time. If they did, well, the market would never be able to go anywhere, right? So, of course, support resistance is broken. But these are areas where we look to potentially buy, potentially sell, potentially take profits into. And you need to obviously use other things along with support resistance. You can't use just support resistance alone. It's one of the 4 energies of my 5 energy methodology. It's actually step 4 of 5 that we look at in my very rule-based objective trading methodology. Okay, let's look at one more example here. So I switched over to a different market now, and just to show that this works on all markets and works on all time frames as well. But so with this one here, we've got a high put in here, significant high, significant low, and the market goes right back to that high. Now this time it breaks through support. All right, now, so it breaks through, goes kind of choppy a little bit. Where does it come back to, though? It comes back to resistance. So this is, again, a very basic concept that is called, let me get my arrow here. So this would be support at this point, potential support, and support becomes resistance. So once the market breaks through a support line and goes below it, then if the market retests that, it becomes resistance. Again, very basic concept in technical analysis. One of the few basic traditional concepts that I find actually continues to work today. A lot of the traditional stuff I don't find works anymore. It's interesting. I get a lot of people posting on YouTube saying, well, I'm doing it wrong. That's right. I'm doing it wrong based on the classical technical analysis because I don't believe classical technical analysis, by and large, works very well anymore in today's markets. Markets have changed dramatically now that we have flash trading, high-frequency trading. We've got algo trading. We've got, commissions are low. Everybody's got direct access to the markets. It's changed the way the charts move, the way the chart patterns are created. And so a lot of the classic stuff, doesn't work anymore. So that's right. I am heterodox. I don't hold the line. Doesn't mean I don't know what I'm doing. It means I reject the old classical style. So this is part of one of the few things in traditional technical analysis I find does still work. So anyway, then we come back down here. We put in a low. Retrace back up. Where do we find our support? It holds support here. Goes back up. Where does it go to next? Again, that support that becomes resistance. And so you can see the market really does just respond. I mean, these I would say are the most important support resistance levels of all. So if you're wondering with Forex trading, whether it's for beginners or even stock trading, E-minis, futures, commodities, whatever you're trading, to me, these types of levels are the most important support resistance levels that there are. So definitely have them on your charts. Watch these levels in conjunction with other things, including cycles, which are very important. By the way, people often ask, well, how do I know if the market's going to hold support here or break through it? Great question. Very important question. So number one is it time for the market to put in a low, a cycle low? And number two, is this market moving down with tremendous strength or momentum? And so if you're interested in my cycle indicator, I'd be happy to share that with you. Just send me an email to barry@topdogtrading.com, and I'll be happy to share that with you absolutely free. So if you like this video, please understand it's really not free because, it's free here on YouTube, but if you got value from it, you have a moral obligation to pay it forward. Share it with others by clicking that share button below and share it on social media. In addition, if you're watching this on YouTube, please click the thumbs up icon below and leave a comment. I really love your comments. Even if you disagree with me, I love to hear what you have to say. Love your responses. I'm giving away one of my favorite trade strategies I call the rubber band trade. It has a really high win-loss ratio. It's a simple trade. I can teach it to you in about 26 short minutes. So get the video explaining that trade strategy absolutely free by clicking in the image in the top left corner, or if you're on a mobile device, click on the little eye with a circle around it at the top right corner of this video. And if you're not watching this video on YouTube, then there's a link below or an opt-in form on the side. And once you do that, I'll personally email the video to you with the rubber band trade strategy.